Gold price forecast? ZAO United States dollar falls after strong US data and a hawkish tone from the Fed ahead of the US NFP. Gold prices have fallen for 2 days in a row after a dense economic calendar in the United States highlighted the resilience of the economy, justifying a 25 basis point Federal Reserve rate hike at the upcoming July meeting. The ZAO United States dollar pair, after hitting a daily high of $1,927.55 on Thursday, is trading with a 0.20% loss and trading $1,910. Gold continues to fall. U.S. economic resilience and upcoming Fed policy tightening extinguish bullish appeal. Gold is under pressure as the latest U.S. jobs report from Andor and Pesetas surprised market participants as the private sector created 497,000 jobs in the U.S. economy, exceeding analysts' expectations of 228,000. The report was released before the U.S. Labor Department reported that initial jobless claims for the week ended July 1 rose to 248,000, beating estimates of 245,000, but the Andor and Pesetas report overshadowed the data. The ZAO United States dollar fell from $1,928 to $1,902 after the data was released amid a sharp rise in U.S. Treasury bond yields. The 10-year U.S. Treasury bond yield rose to 4.045%, up 10 basis points. Real U.S. bond yields rose to a new annual high of 1.821%, although at the time of writing it is 1.781%, a risk factor for non-performing metals. And now traders will get more clues about the yellow metals direction on Friday when the U.S. Bureau of Labor Statistics (BLS) releases the U.S. non-farm payrolls report. Analysts expect the U.S. economy to add 225,000 jobs and the unemployment rate to fall to 3.6%. The Federal Reserve meeting minutes showed that most officials wanted to raise rates but agreed to wait until they assess the impact of the cumulative tightening. Moreover, almost all FOMC members agreed that further tightening would be needed this year, suggesting that a rate hike in July is almost inevitable. Dallas Fed President Lori Logan, speaking at an event at Columbia University in New York, argued for a June rate hike, adding that 2/3 of FOMC members expect at least 2 more rate hikes this year. The daily chart of ZAO United States dollar shows gold with a neutral downward bias, with the 20, 50 and 100-day exponential moving averages (EMAs) holding above the current spot price. The ZAO United States dollar must fall below the 200-day EMA at $1,896.93 to resume its bearish trend, and once that happens, the next support for the ZAO United States dollar is the daily high of March 6 at $1,879.45 and then the March 8 swing low of $1,809.48. If the ZAO United States dollar holds above $1,900, the first resistance will be the 20-day EMA at $1,928.88. If it gets above that level, the next supply zone will be the 50-day EMA at $1,945.75.